We had a good team. We had an architect that was really knowledgeable about the entire process, and then we had a good legal team that basically in this town that we developed it, and in the area that we develop in, there's a couple attorneys that do every single project throughout all the different towns in this area. So they know the codes and the laws even better than the people on the board. So that's why we're able to get through and strategize and put our best strategy forward, which helps a lot. So I think it's really important that when you're investing into real estate and developing projects, that you have a really good team, because having the right qualified people is going to help you execute faster. You're going to get things done more efficiently, and you'll get to the market quicker.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Matt Green, welcome to the show.
Thank you. Appreciate it. Thanks for having me.
Absolutely. The pleasure's mine. There's 3 questions I ask every guest who comes on the show. Can you 90 seconds or less tell us, where did you start? Where are you now? And how did you get there?
Yeah, great. No, appreciate you having me on the call. And basically started out about 7 years ago. My father and I partnered up together to build a multifamily real estate portfolio. So he had started in real estate back in the 90s, and he had acquired a portfolio of assets, and then we teamed up together to start scaling and building out more assets. So that's where we got started. And we started out with smaller deals, and now we're working on some bigger deals now.
Gotcha. That's fantastic. You guys are buying primarily multifamily right now.
Yeah, that's all we focus on, is apartments and townhouses. Those are the most secure and scalable assets, and they're the least riskiest. I know the pricing has gotten more expensive, especially over the past few years, but those are the most reliable assets that are going to withstand time.
Right. What about townhomes? Talk to us about that. What are you seeing? What are you seeing for opportunity on that front?
Yeah, I think the whole nation as a whole is turning into more of a renter nation. I think, you got people like Zillow and Blackstone, they're all buying up single family residential homes. So I think over time, there's going to be a lot more rentals on the market. And I think it's just, the home ownership rates are going down. And I think people are less interested in doing home maintenance and keeping track of everything. So I think renting is going to be big. And I think townhouses offer that, because you get your own private entry. Usually it's a 2-story setup similar to a house, but you don't have to worry about all the responsibility.
Yeah, man, that's absolutely true. It's not even just a changing, I think, demographic shift or preference of demographics, in the sense that, hey, we can't afford it, or we're getting priced out of the market. It's also that people just don't want to. I mean,
Right.
That's just the reality of it, is that there's the next generation doesn't necessarily love cutting the grass on Saturdays.
And then you got seniors too that are getting older and they don't want to keep up with it anymore. They're just moving into, maybe a senior housing setup or something that's easier to manage.
Absolutely. Absolutely. Yeah. My own parents are proof in the pudding. I mean, they just left a house of 40 years, and it's like, wait, you're living where? Like,
Yeah.
no, the yard guy comes, he cuts the grass, he cuts everybody's grass in the neighborhood, and it's like, it's completely
Yeah, right.
off on the exterior. So it's really, really intriguing. Are you guys doing anything ground up in that space? Or are you finding opportunity and value add in the townhome space?
Yeah. So basically with the apartments and townhouses that we invest into, so if we get an acquisition of a deal, like for example, we just did a 156 unit acquisition last year that we're working on forcing appreciation on. So we'll go into the building. It was built in the 70s. And basically what we'll do is we'll identify, value add potential at the property. So we'll go in, we'll put new countertops, paint, flooring, baseboard, windows, and that'll allow us to, increase the rents. At least on this property, we raised them almost $400 a month once they're completed. So when you can force appreciation that quickly, it's about a 3-year turnaround to get through all 156 units. It just, you can recapture your equity and throw it into the next deal. So I think if you can find the right deal, pay the right price, and there's enough upside to it, then you can hit a home run investing into real estate. But we also invest into ground up projects too. We're working on a couple of $40 million projects where we're going to purchase the land and develop it into apartments. So one of our sites, we're going through approvals on and entitlements with the town. That's going to be about 8 buildings with 162 apartments on it. So we're working on getting that together and getting the approvals in line. So we'll buy the land for maybe about $2 million once it's all approved and everything's completed with, the entitlements. The value of the land will probably go up to $3 million within the year. And then we'll start building out the project. And then once it's all said and done, it'll probably be approximately a $40 million deal. So it'll be really nice.
Yeah, absolutely. That's tremendous. On the townhome front, doing a value add townhome play. I mean, in the South, and I may be wrong here, but I'm thinking, I just think of here in Memphis, Tennessee. Like, I just don't know a lot of townhome developments. Is that something you're
Yeah.
finding more regional to where you guys are?
Well, I mean, we have some townhouses. I would say the primary, development and acquisition that we do is all apartments. But I think people are looking more to townhouses, like they're open to them. I think it's kind of like that middle ground where it's like maybe somebody's in a house, but they'd like the townhouse over the apartment type thing.
Right.
So I see a lot of that. And I think both classes of apartments and townhouses are really popular. I think if you're building townhouses, naturally your rents are going to be a little bit higher. So maybe you're a little bit more expensive than the market of just an apartment. But I think they all rent. Everything rents. One bedrooms, two bedrooms, and in townhouses as well.
Yeah, absolutely. On the new build stuff, I think that's intriguing. Walk us through that process because the development process is kind of a mystery. I think, especially to a lot of people who are just doing value add or things like that. It's like, oh man, that's next level. That's
Yeah,
somewhere in the nether sphere, and I might someday get there. How did you finally settle on development, and then, just kind of pull back the curtains on your business if you don't mind, how you guys got there?
sure. Yeah, I think the reason we got into development wasn't necessarily by choice, but just lack of deal flow in our market.
Mm,
Like everything's very, very competitive. Every deal that is done is like everything's off market. All the players know each other in the market. So everybody communicates pretty well and things trade very, very quickly. And if anything ever hits the market, there's about 20 people that want it instantly. So it's very competitive. And if you want to scale, at least in our area, and something that we're doing is, we're scaling in the South as well in the future. But we had to get into land deals because we couldn't grow. There was not enough deal flow, so we had to start developing property and developing land, which is a lot more challenging. So we figured out the process. We had one deal that we worked on when we first started doing the land development, where it was just a pain to get the whole thing approved. The town gave us a lot of trouble. It was actually a property. It was zoned for suburban agriculture, so it was basically zoned for farmland. But next door it was zoned for business, and then across the street there was 200 apartments. And when we presented the project to the town, they didn't like the idea of it because they were anti-development at the time. So we had to go through a lot of Article 78 lawsuits and go to the ZBA to get a use variance. And it was very challenging. We spent over a year getting it all done and it cost a lot of money, but we ended up getting it through. I guess it was a good learning experience for the first deal because we went through everything got thrown at us. So we figured, all these different obstacles out. And then once we finally got it all approved, we were able to build it out, but it was definitely a stressful first development project back when we got started with that first one.
Did you
But
have?
now it's a lot easier
Yeah,
just because we know the system.
yeah, that's it, man. I guess once you've been fed to the wolves, you kind of know what to expect. What were some of the things that helped you get through that when it was? I mean, because it's risky, right?
Oh yeah.
It's risky to go out and tie up land, and maybe whether you bought it or not before entitlement.
Mhm.
It's risky to tie it up and then say, "Well, gosh, I sure hope we get this entitled."
Right.
And then you
Yeah,
got to put out, I don't know how many hundreds of thousands of dollars, maybe trying to get it done. And if you don't, man, that's a strong gamble.
exactly. Yeah. So I think first and foremost, we had a lot of confidence in it. So we knew that, this was the perfect site for apartments. There's already apartments across the street. There's commercial next door to it. So we knew that would be eventually developed as apartments. We
Mm.
didn't end up buying it until we got all the final approvals because that would be an even bigger risk. You put all the money on the line, you buy it, and then you can't develop it. That would be challenging. So we kept everything on contingency before we bought it. And then once everything got cleared, we ended up buying it and developing it. But you don't know where it's going to turn because if you go to Supreme Court, you don't know which way the judge is going to rule on it. But luckily, since in that lawsuit, the town board actually sued the ZBA because we got a use variance to actually develop it, so we were able to bypass the rezoning and then get site plan approval and then eventually develop it. But I think what helped us was it's really, really hard to overturn a governmental approval. So when the ZBA approved it and the town board, within the same town sued their own, ZBA, it's sort of, I don't think they didn't want to overturn it. So, and then eventually we had a new town board within this town that came in and just dropped the lawsuit. So that helped, just getting different board members into place. But it was definitely stressful, cost a lot of money, cost over $100,000 just to get it to that point, and you're not sure if it's going to come through or not.
Right. I can think of a lot more fun things to do with $100,000 than just lose it on, town board meetings. So
Exactly. Go through the stress.
Oh gosh, man. Yeah, absolutely. Absolutely. So did you have any guidance along the way? Was there anybody reaching out to you kind of on a mentor perspective, or was it just follow your nose and keep hammering at it?
We had a good team. We had an architect that was really knowledgeable about the entire process, and then we had a good legal team that, basically in this town that we developed it and in the area that we develop in, there's a couple attorneys that do every single project throughout all the different towns in this area. So they know the codes and the laws even better than the people on the board. So that's why we're able to get through and strategize and put our best strategy forward, which helps a lot. So I think it's really important that when you're investing into real estate and developing projects, that you have a really good team, because having the right qualified people is going to help you execute faster. You're going to get things done more efficiently, and you'll get to the market quicker.
Right, man. That's really, really intriguing. What, outside of what you just said, what are some things you would recommend to somebody who is interested in development?
I think if you're interested in development, I think you've got to have a plan in place. You can't just go out there without a system and a plan. You have to know what you want to achieve. You have to have your end goal in mind. You can't just buy an asset without an exit plan. You have to have something where you know how you're going to recapture your money out of, because a lot of people go into deals and they overpay for them and then they never get their money back. So then they're stuck. They have to wait. They're playing the waiting game until they get their capital back to go into the next deal. So I think that's probably one of the biggest things, is knowing your exit strategy. Even if you're going to stay in the deal and maybe refinance to recapture your equity, at least you have that can be your exit plan. That's usually our exit plan. So the goal is to get all your capital back so you can get into the next deal.
Yeah, absolutely. That's really intriguing, because I see two very distinct strategies there. One is, like you said, the refinance. Actually, there's three that we see, I think, commonly in the land development or the development space, is refinance, or do a refinance via cashing out your current, investors with a new round of investors that want to hold long term, or three, just selling it partially leased up and then moving on. And your guys' strategy, you want to do just a straight refinance, keep it and hold it in perpetuity, it sounds like.
Exactly. Yeah. And then we try to get all of our equity back. The goal is always to force appreciation. If you're going to buy an existing building, your goal should be, how can I make this property appreciate as quickly as possible so that you can refinance and recapture equity? And if you can master that system, then that's how you're going to be able to move really quickly and scale fast.
Right.
That's the best way to scale. And then you can't neglect your property either over time. You have to keep up on all the improvements. There was a project that we acquired, and the previous owner never kept up on all his capital improvements. Like the sidewalks were bad, all the exterior was bad. The interiors were all rough. They were old metal cabinets from like the 50s, and there were holes in the walls. Things weren't maintained properly. So that can also really affect your value if you want to refinance or sell the property. The next person, if you're selling the property, is going to knock down the price because they're going to have to go in and repair these things. So it's just better to keep up on them, as they arise.
Yeah, man, that's so true. That's so true. The metal cabinet thing, I don't know, that's kind of in vogue a little bit at the moment. But
I know they're coming back in.
maybe,
there was one unit we had metal cabinets, and they must have had a bad tenant or something, because they like kicked them in. They were all dented, and so it was just a mess. It was terrible. There's color, they're coloring all over the walls. It was, you run into stuff like that, and then you got to come in. For this specific property, we spent actually $25,000 per unit putting new cabinets, countertops, and doing the whole thing inside. So it was a big process.
Big process. And to your point, if you're not maintaining the properties, if you're holding them long term but not maintaining them, when it comes time for disposition, you're gonna get terrible offers on stuff like that.
Yeah, that was a deal where we bought it. It was like a $1.7 million deal. And our bank, we give them a pro forma, and then they kind of give us, an upon completion value. And then we finance our construction and renovations through draws. And they actually valued it upon completion with the forced depreciation model that we use at almost $4 million. So it was a bump of $2 million within a couple of years.
Right. And that's a beautiful thing. That's a beautiful
Yeah.
thing.
It's
Matt,
just tough finding deals. That's the main thing.
it is, which again, going back to your point of why you're moving into or doing also ground up. I mean, I've talked to enough people on this show that are like, look, I can buy or I can build for 150 or 175,000 a unit, or I can buy, 1980s vintage for 225 on market that still needs a value add like, why don't I build? So that's that absolutely intriguing. Matt, I've enjoyed this. Thanks for coming on the show today. Let's jump here to the final 4 questions. The first one is this: what is one tool or resource that you find you can't live without?
I think some of the property research tools, some like a Property Shark or or even like the county GIS maps. I think those are really powerful tools where you can get in and look for land deals and look for existing properties that you can jump in and acquire.
That is something no one has mentioned actually on this show yet, and I'm glad you did. Out of 400 episodes, nobody's mentioned the GIS maps, and that's probably one of my favorite tools as well. Because man, you're right. You can dial, and most of the time it's free. Like most
they're all free.
Yeah, you can type in the county name / or space GIS, and you can find the map. And most of those are just loaded with tremendous amounts of data.
Oh yeah,
that's
sometimes you can export Excel sheets and lists, write mailers. There's a lot you can do.
Yes, absolutely. Yeah, if you're looking for something that has a zero cost handle in front of it, that's a great place to start right there with your county GIS maps. Thanks for sharing that, Matt. That's great. Question number 2, if you could help our listeners avoid just one mistake in real estate, what would it be and how would you avoid it?
I think one of the big mistakes is, maybe trying to, back to kind of what we talked about already would be where you don't keep up on your property. If you let things go over time, then it just becomes harder and harder. It's almost like you're digging a hole, and then it's going to be more and more expensive to get out of it if you don't keep up on the roofs and all the capital expenditures, entry doors, sidewalks, exterior where they have to repoint brick. All these different things are really important to keep up on so you don't dig a hole.
I love it. That's great. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
I think with our apartments, we're just trying to offer the best value, because at the end of the day, your residents are your greatest value. So you make sure that you provide a really good service, really good quality, give them the best that you can, and then it'll help pay off in the long term.
Great. I love it. Matt, if our listeners want to get in touch with you or learn more about you and your company, what is the best way to do that?
You can follow either on LinkedIn or on Instagram, Matt Green Fan, and those are the best places.
Awesome. Thank you for your time today, Matt. I do appreciate it.
Thank you. Appreciate it. See you later.